In the end, there will be a great upheaval, and this will begin because of what has happened in the financial system. As people become more and more poor, poverty increasing, you have unemployment, and this will undoubtedly bring chaos to your city. People will be breaking down your door in order to get what they need, and that is the basic essentials in life. As food prices become too expensive to afford for the lower class, and then it will become the middle class, and soon there will be a very small portion of rich sitting on top of everyone else. Let's get into the news today. You came here for the truth. Let me unveil that for you right now. This is out of The Economist, the world's biggest economic problem. And then you could see the parrot is on the euro stimulus, and it isn't doing too well. So right here it says deflation in the eurozone is all too close and extremely dangerous. Now, what was happening in the eurozone over the past few years is that we've had a big problem, all because of a single interest rate, a single currency for countries that are all different. They set this up in such a way that it is actually impossible for it to succeed. You had countries like Germany, and then you had countries like Greece, and they're quite on the opposite end of the spectrum. But of course, that isn't a concern for those who wanted to set up this global governance structure. You set up a bunch of technocrats at the top, and they will be able to make the decisions because they don't have to worry about elections and other unimportant things like that. So let's get into what the article said, and this is just one thing. Now that German growth has stumbled, the euro area is on the verge of tipping into its third recession in 6 years. That is a triple dip recession. If you don't think that this is a problem for the whole world, you're not really paying attention. This is globalism. It is very important for the whole world's economy to be doing well. But here it is, a triple dip recession coming on, and this is using their fake government statistics. Pretty bad here. And the overall inflation rate in the eurozone being 0.3%. So according to their statistics, they're basically not growing at all in terms of inflation. Now, deflation could be a good thing. I think over time it's not a bad thing, because if you are basically able to get more money in the pockets of the individuals in real terms, then it's a positive thing. But at the same time, if you couple that with high unemployment rates, and then you add on the austerity measures that are strangling people, you increase the taxation, that really isn't how deflation is supposed to work. All the asset prices are supposed to drop so that individuals can get into the market, but that's not happening right now, and it is actually quite sad. So let's get into what Mario Draghi said, and that is whatever it takes to save the single currency. And they're doing all kinds of scams and schemes, things that I cover here often. I'll move on. This is the at least 11 banks to fail the European stress test. At least 11 banks from 6 European countries are set to fail a region-wide financial health check this weekend. And this is about going to test 130 banks. Well, there are a lot more than 130 banks, first of all. And the second piece is that essentially we've seen these stress tests before, and now they passed them prior to the financial crisis. So we know that they are fraudulent. But of course, that's not the point. Let's just pretend for a second that this is all real, this is all fine. We know specifically that they failed them before. If they failed before and we have more debt now, they will fail again. All 130 banks should be failing just because of the fractional reserve lending. Then when you add on top of that credit default swaps, collateralized debt obligations, other types of derivative products, there is an impossible to ever pay this back. It's crazy. I can't believe that I have to come on here and explain this. I know that you guys know this, but the individuals in the mainstream media really are in denial. When I talk to a lot of the people in the finance industry, I'm getting a real denial of this existence. The derivatives, they think that derivatives are outside of their realm. They don't get into that. One gentleman said to me, we do not invest in derivatives, but it's not how it works. You do not invest directly in the derivatives. The derivatives are sitting on top of those markets, and they're being traded by the high frequency trading, the algorithms, and all sorts of things like this that push and pull the market in every which direction, taking it down 1,000 points in a matter of seconds. That's what we're talking about here. All of your wealth can be evaporated in an instant, and you can't even sell because there will be nobody to sell to. That's what I worry about. In my book, I talked about this, number one, saying that even the Bank of England is buying hundreds of billion dollars worth of its own bonds to keep interest rates at record low levels. That's the way it works. See, they need to keep the interest rates low. In order to do that, they have to print money. And that's what's going to happen in the U.S. big time, and it already is happening, but we're not even close to where it's going to happen. I also talked about 40,000 European bank employees losing their job in the matter of a month in the summer of 2011. And that's exactly how this could take place when you have a very short period of time and a bunch of people losing their jobs all at once. And then that puts a bigger burden on the government as they have to give them their unemployment insurance, or they have to apply for food stamps or some sort of other welfare type program. And that is a huge burden. And what do? Ultimately, they need somebody to buy up their debt, but the foreigners are buying less and less of the debt. So what does that mean? The government has to step in, I should say the central bank has to step in and buy up that debt. Of course, that doesn't come without its consequences. And here, I just get into more of exactly what's happening in Europe, how they're not reducing the debt, they're simply piling on more. This is Hoisington Investment Management Company in their quarterly review and outlook. It's actually quite dismal when you look at this. The U.S. debt to GDP levels swelled to a peak as high as 360%, well above the critical level noted in various economic studies. That is massive. That is gigantic when you think about it. 360%. Now, depending on what you're calculating in, are you calculating in Medicare, Medicaid, all the unfunded liabilities? These percentages vary. However, let's just go with this. 360%, an amount that can't be paid back. That's not even getting into all the derivatives and everything that's on top of the system. But just here, the debt to GDP ratio, it shows you that this is an economic mathematical certainty of failure. Remember that I said this. It's an economic mathematic certainty of failure. Let me go on. Dissecting the Dow. This right here is out of the Wall Street Journal, showing you the big boys here: Caterpillar, IBM, Merck, Coca-Cola, ExxonMobil, all down right now. And then you look at the stock market. While it's fluctuating, it has come up quite a bit recently, but these numbers here are showing you weak economic growth. That's exactly what's happening. You can print up money and force up the stock market all you want, but the economic growth is always going to be down when you don't create jobs, when you don't have a strong middle class, and when you force manufacturing overseas. I will move on again. This is the Dow Transports, showing you the volatility in the market increasing significantly over the past few years. And that is pretty obvious. Ever since the financial crisis, you had maximum volatility. This is also the case for the NASDAQ, and another chart that was around that I didn't include in this video, but just showing you the fact that volatility is increasing significantly, all because of the Fed policies, all because of things like TARP and these stimulus packages that force money away from the hands of the taxpayer, away from paying down the debt, and instead increasing the debt. That's why you know this is a total fraud. If you just pay down all the debt and you reduce taxation on the whole economy, essentially everybody, lower, middle, and upper class, you will see that more people will spend and the economy will be driven to new heights. But that's not what they want. They want people in poverty. They want this system to continue because it is giving them more and more control. And what does a big government want? More and more control. Let's get into this. The cost for a year. Harvard, right here, about 60,000. Nursing home, about 80,000. And then a New York City jail for a year is over $160,000. This is showing you how expensive it is getting for them to put people in jail. And of course, they are putting them in there for nonviolent crimes. They are putting them in the jail system so that they can have people making 25 cents an hour instead of $25 an hour. See, the manufacturing base isn't all being pushed overseas. We do have a growing amount of manufacturing ending up in the jail system, and that of course is the private jail system, particularly where these people are receiving incentives in order to put people in jail. So of course they are going to put more and more people in jail for every excuse in the book they can find, and of course the real criminals are always going free. The market status alert, Euronext, and what they're talking about is the little issue they were having yesterday. Once again, this is happening practically every day now, where they're having the inability to trade for a period of time. And this is happening in different markets too. It's not just one single market. You have these computer algorithms that don't know what the heck they're doing, and then you have the individuals who are supposedly running them who don't understand what these computer programs are, and it's causing these crashes. And eventually, this is going to be a big disaster. I have brought this information to you multiple times, specifically because I know that this is going to be a big disaster. It's going to shut down the market at some point, and this is going to cause, again, more volatility. And this is what we have now. We don't even have a real market anymore. If your money is in the system, it's going to be trapped. It's going to be locked down. A lot of people ask me, should I invest in inverse ETFs and basically shorting the market? I say no, it is too risky. Although I do believe the market is going to head downward, it's not worth the risk because you're giving them the money. You're putting your money into that system. It's simply too risky. It could be locked out. This is no different than a bail-in. That's why I suggest everyone take their money out of the banking system and put it into things that are real. Real assets will hold value at much better levels than something like this, which can leave you out of your money in an instant. If you found this video informative, I really appreciate if you guys give me a thumbs up. I am celebrating now over 1,000 people on the Insiders Club. We're at about 8,000 subscribers here on the YouTube channel, and I wanted to just basically thank every single one of you. You are very important to me. You're the reason why I continue to push and try to bring these videos out every single day. I really appreciate all the kind words that everyone's giving me. It gives me a drive to continue on. Don't forget to become an insider if you're not already on there, joining the other 1,000 plus, and that is very simply at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.